Ladies and gentlemen, good day and welcome to the Q3FY25 earnings conference call of Mallcom India Ltd. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Suryavanshi from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Alaric. Good morning and very warm welcome to everyone. On behalf of PhillipCapital, I am pleased to welcome you all on the earnings call of Mallcom India. We are happy to have the management with us here today for question and answer session with the investment community. Management is represented by Mr. Rohit Mal, Associate Vice President, and Mr. Shyam Sundar Agarwal, Chief Financial Officer. We'll begin with the opening remarks from the management, followed by the interactive question and answer session. With this, I hand over call to Mr. Rohit. Over to you, sir.
Thank you. It's a pleasure to welcome you all to our earnings conference call for the third quarter and 9 months of the financial year 2025. Let me first start by thanking our host, PhillipCapital, for hosting today's earnings call. I'll begin with some operational highlights for the third quarter of the financial year 2025, after which our CFO, Mr. Shyam Agarwal, will provide a detailed brief on the financials. We had a strong performance in the third quarter across the financial parameters. This was possible through our relentless efforts on growth and cost optimization. On the capex front, our greenfield expansion at Sanand, Gujarat, which is being set up for the manufacturing of Protect gloves, is almost complete. The trial runs have also started, expecting commercial production by next month. The company has already invested about 80 crores in the project against an estimated total investment of rupees 90 crores. The greenfield project at Chandipur to manufacture industrial safety shoes and a DIPP approved design studio is also nearing completion. The factory building, which measures almost 50,000 square feet, is almost completed, and the installation of plant and machinery and fittings is in progress and expected to be completed in the next 15 days. The trial run for this unit is planned to commence from March 2025. I'm also happy to report that during the quarter, the company was awarded the prestigious Great Place to Work certification, as well as the Outlook Business Spotlight Safety Leadership Award. In line with our commitment to expanding the product range, we launched a new range of wider toe cap, single density safety shoes called Docker and Doxin. Now I will request Mr. Shyam Agarwal, our CFO, to brief you on the financial performance of the company.
Thank you, Rohit, and good morning, everyone. Let me brief you on the consolidated financial performance for the third quarter and 9 months of the financial year 2025. On a consolidated basis, the quarterly operating revenue stood at rupees 118 crores, reflecting a growth of 23% year-on-year. EBITDA for the quarter was rupees 15 crores, a growth of 31% year-on-year, with EBITDA margins of 12.91%. The net profit was reported at rupees 9 crores, a growth of 32% year-on-year, with a PAT margin of 7.65%. Over the 9 months period, the company's operating revenue grew by 17%, reaching rupees 349 crores. EBITDA grew by 10% year-on-year, reaching rupees 45 crores. The EBITDA margin was reported at 13%. The net profit for the period grew by 13% year-on-year, reaching to rupees 28 crores, with PAT margin reported at 7.93%. Thank you. With this, we can now open the floor for the question and answer session.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rushabh Shah from Bugle Rock PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I had 3 questions. Sir, our vision of
Sorry
1,000
to
crores.
interrupt, Rushabh. Could you be a little louder, please?
Yeah, am I audible now?
A little louder, please.
Hello?
Yes, please go ahead.
Yeah. Sir, our vision of 1,000 crores top line by FY27. You said that the growth will mostly be denominated by the domestic market. But historically, we have mentioned that in exports, we have great margin and there is huge opportunity in exports also. So, could you please explain me how we reach to that vision?
I can take this, Rishabh. So, I don't know if the two things that you mentioned are related, because the idea is still to reach 1,000 crore mark, and we see a lot of potential in the domestic market for sure. So we are expecting a higher rate of growth from that market to reach this target. And profitability-wise, I think we've always said that it depends on the product category, it depends on the market. It's not very linear that private label has or exports has more or less profit than the domestic market. That depends completely. But our idea, that how we are envisioning, there is definitely scope for growth in the export market as well, and we are pushing for growth in both the markets. But the expectation is that the domestic market will grow at a faster pace because of the fact that the country is growing. There's a lot of tailwinds, and there's more predictability in that market. That's what we are envisioning.
Okay, fine. Sir, my next question is, in the past 2 to 3 years, how many new products have we invented, and how are they being readily accepted by the market?
So, Rishabh, firstly, we are not inventing, we're developing products. So, it's nothing like, that new is being created. We are developing new products. Every 3-4 months, we are launching something new, because we have a wide array of product categories in which we would like to develop. So I am expecting every year at least 3 to 4 major product launches are happening. And it depends. Some products are launched for certain markets, some products are launched for certain industries, some products are launched to cater to certain specific white label customers. So with the view in mind that it gets widely accepted elsewhere as well. So we keep doing this exercise, and we have had a fairly good response, and that's why it's encouraging, and that's why we keep reinvesting into product development.
Okay. And so, my next question was, company had introduced this new nitrile glove range, which was launched a few years back. So does any other player make these kind of gloves, and how cost efficient are you in making these gloves as compared to others?
So in the world, there are a lot of players who are making these gloves. In India, I think hardly 2 or 3 players probably who are making such gloves. And nitrile gloves also have a wide range, so it depends what kind of nitrile glove you're talking about. The ones we are producing, the biggest competition that we face is from China. They're definitely cheaper in those kind of products, but it depends on the quality as well. So I think the fact that we are still accepted in the market, both international as well as the domestic market, as we're seen as a quality player, says that okay, the quality to price ratio is acceptable for the market.
No, so just leaving aside China, the other players in the domestic market, so the quality which Mallcom produces, how cost efficient are you than those 2 to 3 players?
It's difficult to just compare it like that. I would still like to say that the price to quality ratio for us is good and acceptable to the market, and that's why we are experiencing decent growth for these product categories in the domestic market. And we are investing more into it.
Yeah, to just add on what we have done in case of nitrile gloves, that the maximum backward integration to minimize the cost. So and scale of operations also we are trying to achieve. So keeping these two things in mind, we would like to be cost competitive, and maybe we can compete with the cheaper Chinese imports also. This is our plan.
Fine. Thank you, sir. I'll get back in the queue.
Thank you. A reminder to all participants, you may press star and one to ask a question. The next question is from the line of Aradhana Jain from B&K Securities. Please go ahead.
Hi. Thank you for the opportunity and congratulations to the company for the good set of numbers. I have a couple of questions. The first is, if you could just highlight what were the drivers for the 23% top line growth. That would be my first question.
Sure. So, as we were expecting as compared to last year, because we had supply chain issues in certain places, so we had some loss of revenue, so we were able to recover that, and that's why it shows this kind of growth. The other is that newer markets and newer customers have opened up, like our push towards North American market is going in the right direction. So we've had some newer clients add up as well, and definitely in the domestic market, the growth as we had expected is coming. So it's a combination of marketing efforts, ensuring supply chain issues are ironed out, and newer launches in addition to the product categories.
Understood. By the gross margin, when I see.
Aradhana, you are breaking up. Can you please come to an area where there's better range?
Is this better?
Yes, much better.
Yeah. So my second question is on the contraction in the gross margin that has happened. When I was comparing your product mix as on 3Q versus the last year, I witnessed that the safety shoes contribution has reduced from 61% to close to 40% this year, while the garment contribution has increased from, say, 13% to 35%. So could you throw some light on how your product category-wise gross margin stands?
Yes. So, Rohit, let me answer this. So, what we know and the figures which we have shared is the safety shoe contribution remains almost similar what it was last year 9-month period. But definitely we have grown into garment segment. So, as Rohit mentioned, we had some supply chain issue last year, and which we could iron out this year, and this has led to some volume loss there, and leading to this the growth which we could achieve. And margin wise, I would say that both the products will have EBITDA margin of around 15%. And we had some additional cost which we have incurred into marketing expenditures and some consultancy charges also we have been paying. So that had led to some marginal profit erosion. Otherwise, it is almost similar to previous period.
Sure, but I mean 400 bits of compression would be because of product mix, inferior product mix this quarter or 9 months, or like the marketing cost that you are saying that would be having an impact on a EBITDA margin, right? I'm just trying to understand.
We don't see any 400 bips contraction in any of our margin, any of the product. I don't know from where you are picking up the figures. So we have
I'm comparing 3Q FY24. The gross margin for 3Q FY24 was around 43.4%, which this year is 39.4%. So that comparison I'm doing.
No, we need to see them then, because that figure is not in front of us. We need to check that because we don't see those figures, so we need to check on that. And we can revert to you separately then.
Sure. The last question from my end is on the export market. So if you could just throw some light on how the export market trends have been during the quarter and what is the outlook given that now Trump has come in. So any change in your export market contribution or anything, any thoughts on that?
Export market has been fairly better as compared to last year, I would say. And also because, of our supply chain also, we have been able to address the market also better and faster as compared to last year. The order book has looked healthy and still is healthy as far as the export markets are concerned. So I think we are experiencing growth in most of the major markets in which we are by increasing volumes with the existing wallet share and also adding new expanding our market presence and market share also. With Trump coming in, it's too early to say because a lot of comments have been made, but not enough actions. So everybody is vigilant. Some people are definitely proactive. Some Americans especially are proactive, and some Europeans are also following suit where they are exploring dual sourcing options to China. But it's not in a very aggressive manner that they're doing it. It's a more look and watch and act kind of manner in which it's happening. So we are also waiting for the big push to happen. And also we don't know what will the stance be with China, with India. So that's why it's a little tricky right now. Europe, we are seeing it's again this year maybe slowing down a little, or that's what people are saying. But we are yet to experience that. And usually first the markets experience and then it comes to us later. So we are also being watchful, and as always we are trying to open up newer customers, newer territories to ensure that we don't have erosion of our revenue.
Understood. That is helpful. Thank you and all the best.
Thank you.
The next question is from the line of Anand Mundra from So Wealth. Please go ahead.
Yeah. So thanks for the opportunity and congratulations on good results. Sir, I'm new to this company. Just wanted to understand how large is this market, sir, and who are the key players?
So globally, the market is almost probably $60 billion market, and there are a couple of billion-dollar companies also operating in this market. Companies like Bunzl and PIP, and you have Ansell and some multinational companies also operating in it, and then most of it is being serviced by China as of today. I would say 70% of it.
Okay. And in India particularly, sir, which are the other players?
So in Indian context, you have players like Bata Industrials and Liberty also. You have players like Karam. You have players like Superhouse. These are some of the players which are also Honeywell and Ansell and 3M. They also operate in this market.
Okay. And so how do we do our sales? Do we do it directly to distributor, or we have our own sales people? Because I'm assuming that we would be selling it to corporates only, B2B things. So how are we doing
we
on
have
sales?
two separate markets, two separate go-to-market ideas, and one is where we are producing for white label, which is happening in Europe, North, South America, Russia, and Australasia. And then in the Indian subcontinent, Middle East, Southeast Asia, and Africa, we have a distributor network through which we service, and we also have our sales team, which is doing the technical sales with the distributor to end users.
Okay. And how many distributors would be there sir, in India?
In India, there would be around 70-75 distributors as on today.
Okay. And sir, this export business is all white label?
Like I said, in Southeast Asia, Middle East, and Africa, we export under our brand name, and rest is white label.
Okay. What is the breakup, sir? How much would be white label out of 100 rupees revenue which we generate through exports?
60% would be white label. Like, so for practical reasons, the entire export, almost 95-97% is white.
Okay. And sir, are you seeing any traction of growth in export because of China Plus One, that people are giving you more order or there are more inquiries?
Yeah, that's what I was mentioning earlier. So because of China Plus One, definitely there's been more movement in the market for Indian or non-Chinese suppliers. And we are yet to see larger inquiries being, coming here and converting into orders. We have seen some movements, and we have been able to convert some of such customers. But one is the scale at which China is operating. I don't think India is ready for it. So even if we start getting a lot of huge inquiries, I don't think we can service it because of the capacity and the raw material ecosystem. And also, it's not easy to shift the supply chain. So it's early days, and we're still witnessing it, and we're still trying to convert some of these.
Okay. And what would be the price point difference between your product pricing and Chinese product pricing for white label export?
Difficult to answer. It depends on the product, depends on the market.
So, as a percentage, for example, sir, we are not able to compete with Chinese because of the price point at which Chinese players are supplying?
Again, depends on the product. We have a varied product category, so it depends on which kind of product. So some products India is competitive, some products India isn't. For our kind of quality, some places we are very much competitive, so it depends completely.
Okay. And so as an Indian economy, do we import also low price products from China? Not you, as an industry answer.
Sorry?
No. We are importing some of our raw material requirement. That's all. Otherwise, and that too some technical textile which, through the nominated vendor of some of our customers. Otherwise, primarily the sourcing is from India only. They're not importing.
Okay. No, are there any traders there who import from China and sell it in India? Finished products?
Yeah, there are a lot of people who import from China and sell it in the Indian market.
Okay. And so what would be that quantum, sir, in terms of size of the industry? How much would be the import percentage?
That's difficult. I don't think we have the data, but a lot of it is unregulated players, also unorganized, and since India does not have standards or requirements for some of these product categories, so the data is also not clear.
Okay. And sir, are there any chances like in other industries where BS4 was implemented where it's difficult to import from China? Is there anything possible in our industry also?
Yes, it is. That's what I was mentioning, that if we have the required certification by BIS, then it will start getting more difficult to import. So in the products which there are certification required. The imports are far, far lesser than in products where no certification is mandatory.
Okay, within your segment, you are saying in some products it's mandatory, some products it is not mandatory, right, sir?
Yeah, right.
Okay. And has this happened in the last 2-3 years, because of which we are seeing some growth?
Has what happened?
The BIS implementation, has this happened in the last 2 years? Old phenomenon?
So BIS is continuously updating the certifications, adding some new certifications as well. But for our product range, no. The ones which don't have it, nothing has happened in the last 3-4 years, and the ones which have BIS have been there for quite a few years. Yeah.
Okay, sir. And sir, now on gross margin, wanted to understand what is the gross margin difference between our white label business and branded business?
So it is not, as we also mentioned earlier, it is not depending upon white label and, branded. It depends on the product category. So, on average, it is in the range of 15%, So maybe in case of leather gloves, we have lower margin. But in case of other products like garment and safety shoes and dipped gloves, we have almost similar margins, both for white label and branded products.
Okay. I was talking about gross margin. Sir, you are saying EBITDA margin is similar, you are saying.
Sorry
correct?
to interrupt, Anand. I would request you to rejoin the queue so that other participants get an opportunity to ask your questions.
Yeah. Thanks a lot, sir. Thanks a lot.
The next question is from the line of Rishabh Shah from Bugle Rock PMS. Please go ahead.
Thanks for the opportunity. Sir, in the previous call you mentioned that to import into India isn't easy because different industries work in different manner and there's a lot of bureaucracy as well in the country. But if there is no standard, then anyone can order anything like 100% they can order. So how difficult is to deal with this and how difficult to deal with all these things like no standards and everything for Mallcom?
So, Rishabh, for the products where there are standards and certification, it's difficult to import or it's mandatory for the importer to ensure that it meets the requirement. And also, in some cases, the supplier needs to have that kind of certification. But in products where the standards do not exist in the Indian context, it is far easier to import. And that's one of the bigger challenges we face in the Indian market, that, cheap Chinese imports and completely non-certified, products are being imported. And that's what we hope and expect that BIS will come out with the Indian standards for such product categories and support the local manufacturers.
These kind of products you may not be having a problem in exports, right?
Sorry?
The cheap quality China products, you may not be having a problem in the export market.
No, exports. So Europe, US, everywhere they have their standards and certifications in place. So unless your product is certified, you can't export into those countries.
Right. Since we are in my next question is, since US was never a big market for us, and in the past also we have stated that we are putting all our efforts, but it was a slow growing market. And also entry into such market is very difficult. But once you enter these kind of markets, the customer sticks with you for a very long time. So my question is, have we progressed into the US markets? Are we able to crack the US markets?
Yes, we have been. Our efforts are also going towards it, and we have been able to crack some customers from that market, and that's why that market is showing, growth, good growth for us. And like mentioned earlier, it's a slow and steady kind of operation, so we have to keep building onto the relationship to the particular client and expect to increase volumes with them. So yes, we have been able to crack that market.
So since you've been able to crack that market, how, like,
Sorry to
what
interrupt.
percent?
I would request you to rejoin the queue if you have any further questions. Thank you. The next question is from the line of Bijal Shah from RTL Investments. Please go ahead.
Yeah, hi. Thanks a lot, and congratulations on good set of numbers. I have one question. So you have given a guidance for an aspiration about 1,000 crore kind of revenue. So how confident are you of achieving that? And that would mean a very meaningful acceleration in growth. So are you confident of, are you seeing already that the growth is set to accelerate in coming quarter or coming year?
So we would still like to stick to the guideline, and we would like to put that, keep that pressure on us going, and that's why we are taking all the measures necessary to ensure our bases are strong, supply chain issues are solved, and the go-to-market strategy is properly laid out. And the efforts are towards ensuring the targets are being met. So we are still hopeful about that target, and we are working towards it.
Okay. And should we see an acceleration in growth? I mean, you have done a lot of groundwork already, so the factories have come online, and commercial production is also set to start. So should we see some acceleration in growth, or it is going to be slow?
Yes, that has to be. So, there is no alternate to that, because if you are looking for 1,000 crore turnover in FY28, so there is a minimum requirement of growth which we need to achieve. And this is what we are saying, that, the target is set, we are following it, and there is a groundwork already done. So, then we need to work on this and try to achieve it. Okay.
Thank you very much, and sir, all the best.
Thank you. Participants, please restrict yourselves to 2 questions. If you have any more questions, I would request you to rejoin the queue. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a good set of numbers. So my first question was on, we have been trying to, sell our products to contract manufacture, white label our products to some of the large MNCs, and and also trying to increase our product basket with them. So if you can particularly talk about how has been the progress there with some of these large MNCs, which will have procurement of billions of dollars. So how has been the traction there for us, and how do you see this building up over the next 2 to 3 years?
It has been fairly going well, and it's so also you have to understand, with these kind of customers, you have a lot of suppliers approaching them and trying to get into their radar. So we are also, because we already have touch points and already are a supplier to them, so it makes it a little bit easier to get access, and the results are there. It's good, and with these customers also, they have their own idea and agenda of how they want their supply chain and where do they want to put it, how much country risk, how much supplier risk do they want to put. So they are wary of what percentage are they getting from which kind of supplier. So they'll also try and restrict of how much business you can do with them in a particular product category. So, but I'm not saying there's no chance of growth. There's a lot of scope, and we have been able to be on good terms with them and have been able to increase our business with them. But it's because it's a large corporation. These are large corporations. It does not happen overnight. It takes a longer gestation period. But that's happening. We are confident of these accounts.
Sure. And my second question was on, our top line. If we look at last December FY24 Q3, the numbers were impacted because of the supply chain issues, as we know that. But, last last 3 to 4 quarters, our top line has been in the range of around 120 to 130 crore per quarter. And despite some scale up, our margins have also not improved. So 2 questions there. So basically, when do you see this top line crossing this barrier of 120, 130 crore? And like, why hasn't the increase in scale of operation resulted in improvement in margins, which normally should have happened given our scale and some operating leverage should have come in?
So let me tell you how it is happening, that the volume which you see of 125 to 120 to 135 CR is the volume which we have been doing all these years for last 2-3 years, and now as you know that all the facilities are ready, and these were the facilities we did investment into capacity building, like adding floor area. So now we are increasing our capacity, also putting new machines, and increasing capacity slowly. So it cannot be, done overnight. So definitely we see that out of this new investment which we are making into machinery now, capacity building for production, that should add up to, our turnover going forward. And regarding the margin, as you know that in our type of product category, the scope is not much there, because whatever margin we have, like 15-16% margin we operate, so almost 60% goes into raw material in most of the products. So there is hardly much scope. Maybe with the increase in efficiency of operations, we may see some margin increase, but there is not much scope there.
So the surprising thing is, we have in fact seen some decline in margins over the past 2 quarters. And
so that is happening because of our effort to increase our volume and branding and product awareness. So we are investing into 2 things basically. One, into marketing efforts, and second is to streamline the operations also, so increase the production efficiency also. So these are the efforts which we are putting in. Going forward, we should see results out of this. So with the increased capacity and lesser cost on this account, some margin improvement is possible.
Sure. And this last question on our target for reaching 1,000 crores by FY28. Given we have put in a lot of capexes over the past 3 years, and we have been trying quite a bit to enter into large accounts and increasing our product basket with them. So do you think we'll start seeing acceleration in growth from next year onwards? Let's say this year we might end up with, if we look at our 9-month numbers, we are up 13%, and for full year basis also, if we look at it, we'll end up somewhere around 480-490 crore kind of top line for this year. From that base to double our top line in 3 years seems to be a bit of steep task. So will we start seeing 20-30% kind of growth from FY26 onwards, or it will be more of a back-ended kind of growth which will come in 27, 28, or how do you think about it?
We should start improving. So as I mentioned, that first for the current year we should be targeting around 15% growth, and from next year onwards definitely the additional volume will come up with the investment we have done, and so that would not be immediate, gradual only, and we keep adding, and we keep looking for the newer market, newer customers also. And in our type of industry, yes, it is possible that capacity addition can be done, like installation of machinery on shorter period, shorter notice, and that we will keep doing based on our demand scenario.
So thank you and wish you all the best. Yeah.
Thank you. The next question is from the line of Zaki Nazir, an individual investor. Please go ahead.
Sir, congratulations on a strong set of numbers. Rohit, I would like to understand that
in the last quarter gone by and the current quarter going ahead, do you see any pull on the general industry front and orders not flowing in because of slowdown? What about the export and the domestic part of it, sir?
So on the export part, not yet. We are yet to see that there's a pullback and orders not coming as expected. But definitely, when looking at the projections that the customers have shared, it is lower than previous year in the export market for wherever we are seeing, especially the Europeans and others. So that is what we have seen, but we are yet to experience it, when we start getting and executing the orders. So that's on the export market. And on the domestic market, there has been some slowdown with the auto industry and some key industries. But I don't think it's a major slowdown that that will we have to start raising eyebrows and questions. And I think the scope of growth and the market is still huge, and it's still a lot left on the table to capture. So I don't think it should be a worrying cause right now for the domestic market.
And Rohit, what white label goods we supply, are these designs given by their principals, or these are primarily Mallcom designs which are labeled under their head, sir?
So happens both ways, and also some are standard designs. So depends on the product as well. So usually for workwear and footwear, the customers would like to share their design, or they ask us to design something, and when we give them, they make their changes to the design. And for gloves, it's largely common designs which are used across. There's some specialized specific gloves which people would like to do it. Then there's some other customizations on the printing, packing, etc. that they would also like to do. But happens both ways, I would say, for footwear and workwear.
And do you think by third quarter of next year, these capacities which we have put up will reach their optimum capacity, sir?
It should definitely for the new Chandipur phase 2. That we are definitely hopeful, because that's a product category that we know and we have been into it, so we are aware. In Sanand, the PU dip gloves is a new category of that we started manufacturing now, and that is a place where we have to really put in the marketing effort to ensure that it reaches its optimum level. So that is what we have to, once we start having the samples and the trial run completed, we'll be able to know and go to the market and check whether this, how quickly we'll be able to reach at optimum capacity. And a larger chunk of it should come from the Indian market.
Thank you, sir. Thank you, and best wishes to you and the team, sir.
Thank you.
The next question is from the line of Priyankar Sarkar from Square 64 Capital Advisors LLP. Please go ahead.
Hi, good afternoon, sir. So just a basic question. How long does it take for the customers to approve products? That's one. And does the approval time vary between products, for example, between garments and shoes?
So for a white label customer, the approval can vary. So if the customer's need is immediate, it can happen very quickly. If they're just looking at something, just comparing, benchmarking, some larger organizations have like 8-10 weeks of just having price benchmarking, quality benchmarking, then the supplier rating and things like that. And even larger companies will have to onboard you, so they'll have a visit to your facility before they finalize anything. They will need audits and things like that. So the gestation period can take from, let's say, a month to 2 years, depending on the size of the customer and the product category. For gloves, because these are a lot of the gloves are standardized. This approval comes earlier because usually it's the same thing which is being supplied. For workwear and shoes, definitely it takes longer time. And sorry, I missed your second part of the question.
I think between products also do the time vary, for example, between garments and, for example, shoes?
Yeah. So, correct. So for garments and footwear, because this is more customizable and this is more brand oriented, also has a fashion element to it, so this takes usually longer time. But gloves are fairly standardized. Most of the gloves, I would say 70%, 80%. So those happen faster than the footwear and the workwear.
Okay. Sir, if I may ask another question. You mentioned that USA, I just want to ask, is the USA picking up faster than EU, though you mentioned that you are not yet see slowdown in EU, because that's very contrary to what we have been reading in the media and the international newspapers and magazines. So just wanted to get your sense. Is US still going faster?
US, yes, because we are starting from a smaller base also in the US. So for us, it's growing faster. Maybe for the entire economy and the larger mass, it's not. But because we were, we had a very small presence, so for us, that's faster. And for Europe, because we have, order books which we see 2-3 months, in the pipeline. So that till the time we are executing those, it's okay. And like I said, the projections definitely have come lower than the last year's numbers from the customers. But because we have not yet reached that cycle, so we have not experienced the slowdown. So based on the projections, when we start getting the orders, we'll know, okay, it's really a slowdown, because it happens, the news happens first there, and for them to push it to the supplier, it takes a cycle of which takes 2-3 months. So there will be a lag in this case.
Perfect. Thank you very much, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Rushabh Shah from Bugle Rock PMS. Please go ahead.
Yeah, thanks for the opportunity again. So, since the PP world market size is 60 billion, and most of it is catered by China, approximately 75%. So, in the past 4 to 5 years, have you seen a shift from the PP world market, mostly denominated by China, to other countries as well?
Yes, there has been certain shifts because of whatever has started happening in the global economy, and this has happened to all the other Asian non-Chinese countries. It has also happened, during COVID and post-COVID. Some people have started manufacturing in places near their countries. So countries like Turkey for Europe, countries like Central America and Mexico for US. So that has also started happening, and all these capacities are being taken largely from China. But since the volumes and the scale of operation is huge in China, I think no other country in the world is ready to take even, let's say, 10% of market share from them so quickly. So I think it's a question of how fast you can build the infrastructure and the raw material ecosystem to ensure that we're able to take the market share from China significantly.
Okay. So that's not so quick, but going down the road, like 5 to 6 years down the road, do you see India contributing to a portion of PP market?
Yeah, that would be my guess, that yes, India should be able to contribute, more for supplying PP to the world, especially with regards to leather, with regards to textile, technical textile. Yes, there should be more, market share of Indian suppliers in the world PP market.
Fine, sir. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for the closing comments.
Thank you all for participating in this earnings conference call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers at Valorum Advisors. Thank you, stay safe and stay healthy.
Ladies and gentlemen, on behalf of PhillipCapital India Private Limited, that concludes this conference. You may now disconnect your lines.